I was in the worst, darkest position in my life. I had big goals trading wise. I wanted to make money through trading, but nothing worked for me. That used to really bring me down. I quite frankly tried every single strategy that I've heard of. Patterns, support and resistance. I literally tried everything, but nothing gave me luck. Nothing worked for me. It was always the same end result. Negative PNL by the end of the week, and that really got me depressed. But one day I found this one specific ICT concept that completely changed my trading and life in the better direction. So if you want this video to actually help you and change your life like it did mine, pay close attention, stay away from the comment section, and just focus on me. So let me give you a quick summary. I always knew about trends. I knew this one thing, that trend is your friend. So let me give you a quick summary. So price always moves in a trend. So in a wavy way like this. Uptrend is like this. So it moves like this. There's higher highs and then there's also higher lows. That means the price always moves like this in a trend. Like this. Because it needs to fix itself, right? And in a downtrend, the price always moves like this in a trend. Lower low, lower high. Lower low, lower high, lower low, lower high, lower low. Why? Because these big banks, they can fill a lot of orders by moving in a trend, by fixing itself, because in here there's a lot of orders. So I will explain you exactly what it is. But remember, price can always move like sideways, and I do not personally trade when the price moves like this, so you shouldn't either. So when it moves like sideways, you shouldn't trade. The thing here is, this ICT concept allowed me to follow these trends perfectly. When the price moves in a trend, uptrend or downtrend, never sideways like consolidation, but when it moves in a uptrend like this, what does it leave behind? We know that the price needs to fix itself, right? We know that the price has to go back and then continue the trend. So in this particular case, let's say this is a higher high, higher low, higher high, and this right here is a mini higher low. What is here that the price needs to fix itself? There is a imbalance, and it's called the fair value gap, that ICT concept. You may know it, but you may not know it the way you think. So I'm going to actually teach you how to spot fair value gaps like it should be, because I know many people in the ICT community, they know fair value gaps, but they really don't know when to use it and how to actually make money from it. So I'm going to explain you exactly how I do it. So I use fair value gaps in a trend as retracement tools, because we all know that the price always wants to retrace. What do I mean by retrace? Well, when it's in a trend, it wants to literally retrace. And some people do not even see this. They know, they're like, okay, it's just retracing itself, the price is retracing. But in that retracement, you can find an entry and make a ton of money. And I've literally done that hundreds of thousands of times. In these gaps, we all know that the price is in a trend. The trend moves currently up. What is most likely that's going to happen? The trend will continue up. When it's in a downtrend, what's most likely what's going to happen? It will continue down. When it's consolidating, moving sideways, what is most likely what's going to happen? It will continue to consolidate. So in this case, when it's in a uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, it will continue most likely the trend to the upside, but it needs to retrace always, because we know it moves in a trend like wave away. So when we see these even small gaps, because the price wants to retrace and fix itself because it moves in a trend. So when the price actually moves in a trend to the upside, in this case, it wants to fix itself like this, comes down a little bit, and during these times, it is the best time to look for a trend, because we know how the price moves in a wave away, higher highs, higher lows, okay? In this case, when it comes down to this point, fixing it itself, we are going into the lower time frames. Lower time frames to what? See candle rejection. Candle rejection is when the candle is actually giving us reaction. It is going down, retracing, and then it actually immediately pumps to the opposite direction. We can see it from the candle. I'll show you how. So in this case, what is this? This is a small uptrend. Uptrend, we want to look for buys, because what is most likely what is going to happen? It will continue to the upside, because that's how the trend moves, okay? It is not consolidating, it is moving in a trend right now. It may not look it, but in the lower time frame, we can clearly would see that it moves in higher highs, higher lows, because this is continuously fixing itself. This candle, small part of the candle, means it already retraced a little bit, so it moves in a higher highs, higher lows. In this higher time frame, we can tell it like that also. But in this particular case, what is this? We can see that this fair value gap has been formed. This one candle, second candle, and there's 3 candles. Okay, this is the gap that is in the middle. So how do we mark out the fair value gap? From the previous candle to the third candle's beginning, so the wick or the end of the body, if it ends like that. So this is the clear fair value gap. And what happens here? We can see that the candle after the fair value gap has been made, this is the fair value gap. This candle goes down, but what happens? What do I mean by the rejection of the candle? The candle rejects from it. It hits it, but it closes like this. The wick is literally showing us this. The wick. What is a wick? Wick is a smaller part of the candle, not the fat part of the candle. And you can see it literally wicks it, not completely. The fat part of the candle does not leave here. So that means the price was moving here, filling the imbalance, taking it out completely, and the price went back up, meaning it closed above here. This is where the candle closed, and we can see that the candle retraced, got us a rejection, and filled the imbalance, which caused us to go up. So as you can see, this is the move up, and this may not even look much, but this is a ton of money that is possible that we could have made here. Ton of money, because if we even go to the lower time frame, we can literally see how big the move was to the upside. As you can see, this is actually a lot of money that we could have made here. Look. So the fair value gap that got filled gave us a reaction by giving us a rejection of the candle. So that is what I mean. When we see the candle actually retracing back to the fair value gap and then rejecting from it, rejecting. What do I mean? There's a move down and then there's the impulse move back to the opposite direction. Because if here's the fair value gap, the price move down and impulse move to the upside. Because it fills it, and then there's the wick that leaves us. We can see that the body of the candle is really small and the wick is huge. I can show you more examples in an uptrend. Okay, in an uptrend, what do we see here? The trend starts to move up. It starts to trend up, right? It literally higher highs, higher lows, higher highs, higher lows, higher highs. Clear uptrend. Now, in this particular case, what is most likely what's going to happen? It will continue the trend to the upside. This is a daily time frame, by the way, super high time frame. What do we have? So this is another fair value gap that has been made. One candle, 3 candle, third candle. This second candle is the gap. So the gap is the fair value gap, the imbalance in the market. So we can take it like this. Boom. What happens? Filled. What happens then? This candle goes to here. This means the candle used to be moving here, but it closed here. It closed here. This is the body, closed. And this is the wick. That means this is history. It used to be here. Filled the imbalance. Goes up. And what does this show us? It is a candle rejection because it filled the imbalance, filled the thing that it wanted to hit, and then we get the rejection because the candle closed all the way up here, which caused us to go up. And what do we have also here? Another fair value gap, as you can see right here. One candle, second candle, and third candle, and this right here is the gap. Look what happens, guys. The gap gets hit. This is a small fair value gap in the daily time frames. It gets hit. Immediate rejection. What do I mean by rejection? Because the candle goes down and it literally went there because we see from the wick that it was there and then it closed here. What happens? Continuation to the upside. Look how perfectly that is aligned, bro. Look how perfectly. Literally what I just told you. Literally. Okay? And that is how you spot fair value gaps the perfect way. And that is exactly what I preach every single day inside the Discord that you can join from the link in the description. Let me show you what's around. Okay, here's a course that you can get access to completely for free. Why? Because I want people to learn and earn, okay? And here's the free source. You can literally see all the courses, as you can see. And obviously there's the live trading room. I make sure that everybody makes money and everything. So join up, change your life, and I'll see you on the other side.